Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Vinod Dasari, the MD of Ashok Leyland, is with us. He joins us from the sidelines of the Ambit India Access Conference that's underway in London. Mr. Dasari, good morning. After what has been a really strong year for you, what are you forecasting for FY19, at least the initial part?
I think FY19 is going to be pretty good. The industry volume is still growing, partly because of the growth in GST GDP post the GST. So we're seeing a hub and spoke where the larger trucks are selling, and the more large trucks that sell, the better for Ashok Leyland, because that's where we are stronger. The other thing that's happening is the infrastructure build. The construction is going on very strong, so tippers are growing very well. It'll be slight slowdown in July and August because of the monsoon, but I think the construction will be back again, and so I'm quite bullish this year. I think the overall volume should grow by about 10%, but rather than look at number of trucks sold, if you look at the type of trucks sold, the bigger the trucks that are sold, the better for us.
Good morning, Mr. Dasari. All this improvement in demand is coming at a time when raw material prices are also rising. Is it easy to pass on these raw material costs because you see demand good over the next few quarters?
No, the RM cost was higher in the beginning, and we did take a pricing action, so our margins are actually better now than before. And I expect the RM cost to stabilize. I don't think it will go up much more.
Okay, despite passing on commodity costs, will there be any pressure as far as margins are concerned? I mean, is discounting still very high?
Discounting is there because there are some competitors who are trying to just buy market share. We're not going to focus on buying market share. I'm happy with the market share that we have. We're not looking to substantially grow our market share. We are focused on the non-truck side also to grow that much faster. We're doing very well on our LCV, where we've been consistently growing, and we're growing our spare parts, our customer solutions business, our digital business, our power solutions business, and our international. All these things, historically we were only focused on our domestic truck business, which used to be about 90% of our business. Now slowly the domestic truck business has come down to about 60-65% of our business, and the other businesses are growing faster, which are more profitable also.
All right, so it's easy to expect another year of double-digit growth, you think?
Yes, I think so. We should expect another year for double-digit growth, while we continue to maintain the double-digit operating margin that we've been historically able to maintain.
What is your view on domestic, medium and heavy commercial vehicles growth? I mean, has that peaked out in any way, and would that start to weaken from FY19 because all of the positive triggers have played out, over the last 6 months or so?
No, I think FY19 will be stronger because of the construction boom. FY20 will also be very good because of the pre-Euro 6. I expect next year to grow about 20%. The year after, when Euro 6 comes, it's expected to come down, but the bullish talk even in FY21 is primarily because of the scrappage scheme. Even if you look at the 20-year scheme that has come now, the government is planning to launch from April 2020 for vehicles which are more than 20 years. That alone is about 200,000 vehicles, so we are quite excited about that.
So you don't buy the analyst's view that truck demand growth will decline to 8% compounded annually, over the next 2 years? I mean, at least that's the view, that it will decline to single digits.
I think for FY19 it will be about 10% growth. FY20 should see about 20% growth.
If in numbers, can you tell us what growth rates are we looking at?
So I expect the growth to be at least 10 to 15% this year, and maybe 15 to 20% next year.
Okay, 15 to 20% next year. You've been there for the Ambit India Access Conference. What kind of feedback are you getting from investors? Are they in general optimistic about India and the corporate growth story?
They're all asking whether the industry is growing, and they're seeing the impact of the GDP growth because of the GST, and what that is doing is it's creating the hub and spoke where the larger trucks are selling very well, where we are very strong, And we're also very strong on the light commercial vehicle. Ever since we bought out the shares of Nissan, our light commercial vehicles have been growing substantially. Last year we grew about 30-odd%. Our international business grew about 40-odd%. Our spare parts business grew about 30-odd%. Our defense, we have won huge number of tenders in the last couple of years. That alone cumulatively will be nearly 10,000 crores worth of business once the orders start to come in. So the non-truck side itself, we are quite excited about. It's growing at a pace fast, twice the rate of the truck business. The aftermarket and the solutions business that we are building will also help us provide substantial growth. I'll give you an example of Service Mandi, which is a digital initiative that we created where you can find on an app any mechanic nearby. And that business, people said nobody will find mechanics using an app, but just in the month of May, we had more than 30,000 transactions, and it's growing very fast.
Okay, all the best for this fiscal. Mr. Dasari, thanks so much for joining us.